Okay, good evening, good evening, good afternoon, good morning, wherever you are in the world. Welcome to Hot Forex's latest webinar. We're going to be talking about one of my favorite indicators and one of the ones I've used for many years, and that's Bollinger Bands, and I still use it all the time. And I'll explain how I use it and why I think they're such a great little invention. Thank you, Mr. Bollinger, Mr. John Bollinger. So before we get going, I just need to read through our quick disclaimer. This material is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Let's get rid of that. Sorry about that. Users acknowledge that any investment in FX and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication does not be reproduced or further distributed without our prior written permission. Okay, that's the admin out of the way. So firstly, can I just ask any of you, do any of you or all of you who uses Bollinger Bands, and if so, why are you here today? Or have you never used them and you like them, or you don't use them and don't like them? Me, I do, me, lots of me's in here. Okay, good. So hopefully, so what are you hoping to find out today then? I love the median band. Okay, Yanni. Good. All right. Well, let me just run through the basics of the Bollinger Bands and why I like them and how we use them in real life trading. Okay. It's important to understand where they came from and the background to them as well, and why they were not invented, but what John Bollinger came up with it. I mean, he still trades himself. He has his own website, johnbollinger.com, I think it's called, and I think they're actually, well, I know they are, they're actually trademarked. The word Bollinger Band is actually a trademark now. It's something he invented 40 or 30 years ago. I think it was the 80s when he first came up with them, but very practical trading technique and indicator. And so you see it on many trading platforms. So what are they? The different types and different settings. I'm saying different types, not really different types, but the different settings. There's two key parameters within Bollinger Bands, and again, they're just like any other indicator. They're a mathematical formula. They're great for support and resistance. They're also great for trends. They're also great for ranges, and that's why they're so popular, because they're applicable to all sorts of trading approaches. And Josh from Blue Sky, if any of you are attending the advanced training seminars that he does, he talks about different techniques within the Bollinger Band pattern. I'm not going to talk about that today. I'm not going to take Josh's thunder, but if you're interested in taking Bollinger Bands to the next level, have a look at Josh's or Jay's, whoever's doing it, from Blue Sky. They're advanced trading strategies. They're not particularly advanced. It's just they come up with, he uses Bollinger Bands and he comes up with 4 or 5 different phrases and words and patterns he sees in the Bollinger Band sort of indicator. What I'm going to do today is just do a little bit about the background and some of the basic stuff, how they can really help you, and obviously some of their weaknesses as well. So basically, a few key points. So Bollinger Bands are a key display of volatility. What does that mean? Well, volatility simply means something that's going up and down. That's all volatility is. Okay, and that's what the Bollinger Band measures. And so if we had to put them in a pigeonhole, they fit into the oscillator indicator. And again, oscillator, like with volatility, it goes up and down. We have a lot of volatility or little volatility. Oscillators just measure that, the ups and downs of the market, the ups and downs of the price, the ups and downs of sentiment, the ups and downs of momentum. It's all energy. It's all about process. It's all about just identifying that and trying to go with the flow, go with the wave. I say this all the time, don't I? Go with the big wave. Try and catch that wave as it's rising. So within the Bollinger Band itself, I'm sure you're aware, there's these three key lines. We have the center line, which is as John Bollinger put them together, they are the simple moving average, and typically it's set at 20. Okay, so the simple moving average, the middle line, a key movement either above or below it. Now then, the upper line and the lower line, the top Bollinger Band or the lower Bollinger Bands we call them, all it's doing is measuring the relative strength of the move away from the center line, if you like, or away from the general price, the smooth moving average. Because the two things you can plot are the number of periods that goes past when you're plotting your Bollinger Bands, or the deviation, and that's what Bollinger Bands are all about. It's all about deviations from the norm, so standard deviations. And a typical Bollinger Band will show you two standard deviations from the norm. And what does standard deviation mean? Well, two words. So standard, so it's typical, this is a set way, and deviation just means movement away from where it's been. And that's all we're doing, and that's why it measures volatility. So it's the relative movement compared to where it's been to where it is now, and that's as simple as it is. Don't overcomplicate it. Just see them as like a distance. You know, the further away you get from something, the more likely it is to come back and turn, whether that's above or below. And that's all the extremes of the Bollinger Band are measuring, these relative strengths and the probability of a possible turn. That's how the theory goes. And I say they work on both trending markets and ranging markets, because that's what they're doing. They're measuring volatility. They're not necessarily showing you direction, but I'll show you in a minute how they help with direction as well, because the general direction of the band itself, all three lines, can give you some indication of what's actually happening in the market. Okay, so they can help with direction. And as that final point on there, I've talked about market energy as well, because they can show you when things are going, you know, there's not much energy in the market, there's not much volatility, the candles are quite small, the price line isn't moving up very much, and we've got this waiting see, this compression of the energy. The energy is just building and building, and then all of a sudden it can explode, and we get this great big tall candle, or the line starts shooting up at 25 degrees very, very quickly, and so the Bollinger Bands will widen and open up like big jaws of a crocodile, if you like, or jaws of a lion, as it opens up and gets more volatile. And you see all that really well plotted on the graph, so it's really easy to see. So that's all we have with Bollinger Bands. You say they were created by the man himself in the 1985, I think it was. I can't remember the exact date. But interestingly, it took him till 2011 to actually trademark them. So there's little Bollinger Bands are trademarked. So you've got to have the right to use them, right to use the name. And say they measure volatility. And people ask me how do you describe them. What are they? Well, I like to think of them like elastic bands. So the wider the band gets, the more tension there is, the more energy that's been in that market to cause it to spread that far. Okay, limits of movement. Or if you look at them, on a chart, sometimes some of the people describe them as like a motorway or a river or a road, you know, with the outer and the lower Bollinger Bands being the river banks, and the midline being the meandering river in between, and which way the river's going. And as the river gets wider, it has more energy in it, doesn't it? So a big wide river has lots of energy because there's lots of water in it. A narrow river can have lots of energy as well, because it depends how steep it is, doesn't it? If it's a very narrow river high in the mountain, because the slope of the mountain is steep, it can still have lots and lots of energy. So it's all to do with energy, and as it expands and contracts, how much energy is moving around in that. So simple, they're easy to use, they're quite easy to understand, but like any of these indicators we talk about and we teach, they're simply that. They're simply indicators, an indication of what might happen, and the theory obviously doesn't work all the time. So never ever use them in complete isolation. Use them with other indicators, and when he very first wrote them, he said never use them in isolation, use them with some other either oscillators or more trending indicators like moving averages, like the RSI or some of the other oscillators as well. And then key helps you with support and resistance as well, because you can draw trend lines help within the actual Bollinger Band movement as well. So typically when you open your MT4 platform, they're set at this. The two things you can change with your Bollinger Band is the period, how many candles it counts, and the deviation, how far away from the normal. So here we've got this is the dollar yen on a daily chart. So this is our center line, our 20 period moving average, and here it's set with a deviation of 2. So when the price gets to the outer or the lower band, it's deviated, it's got away from the normal, to keep it simple, keep it without using mathematical terms, twice, okay, 2 deviations. So the higher the stretch, the higher the more stress on the elastic bands, the higher the deviation that you set, the further away it gets, or the more likely it is to turn. However, John Bollinger, when he put them together, he said with a deviation of 2 and using a count back period of 20, whether it's hours or days or whatever your pattern is, you capture 96% of the price movement. So if we look at that, that's the theory. So he's saying that with this setting, 96% of these candles should be within this envelope or within the riverbanks of our green tiger here, and it's probably not, is it? If you look at here, we've poached out, excluding the wicks, I should say, the closed candles or the closed price. So you know, it's like any indicator. It's not perfect. It's just there to help you with to suggest what might happen next. Okay, so this is a standard setting. I tend to, no, whether it's right or wrong, I tend to now use, still have a period of 20. I tend to set the deviation a little bit higher, not to capture, you know, I want to just to stretch that a little bit more to 2.5. So you can see the same chart here with the deviations just being extended to 2.5 and not 20, not 2. And so this point here on the previous chart, let me go back to the previous one. You see here we were out 1, 2, 3 candles. So here the theory says, well, if it's likely to roll over at this point, some people might have started sort of selling at that, and they would have been stopped out because it kept going, didn't it? Although it broke the candle, broke the extreme, theory says it's likely to retrace from here. It can, you know, keep going like it has here. So with the 2.5, it only actually pokes out the 1, so you get less indication, but they could be more reliable. Okay, so if you change the deviation, that's what you get. You get less indications, but they tend to be more reliable. Okay, that's one thing if you do change the settings. Similar with the, I haven't changed the period here, but obviously with the longer the period that you're counting, the greater amount of data you've got. So again, they tend that if you extend this to 20 and not 25, and again, I know many people that trade with it, they change the setting to 25 and 2 or 25 and 2.5, you'll capture more data, so therefore you'll capture more reliable signals, but you'll get less of them. Okay, but there might be less false signals as well, but we'll come on to that in a wee bit as well. Okay, so here we've got the price going up, going sideways, going down, going sideways, going up a bit, and then going down a bit. And we'll use this chart a number of times this afternoon. Okay. Again, the theory says they're very good for being overbought or oversold. So as soon as it touches the outer Bollinger Bands, it's suggesting it's oversold. So here, again, this is the 2.5 one we've got here. So as soon as it gets to the outer level, it's likely to turn down, but not always, as we've seen in a minute, where it can stick to the outer Bollinger Bands, which we'll look at in a minute. Okay, and again, the theory says when it gets to the touches the bottom Bollinger Band, it tends to retrace. So I spiked down to that and it retraced a little bit, but we were actually under the middle line. So again, that's the theory. So the extremes, so the theory goes, is that it's likely to retrace from there, but as you can see, not always. So as we get to the extreme, we tend to retrace, and the point we're going to retrace to more likely is this middle line, the moving average. So here we've hit the extreme, come back and bounced off it before we broke it. Here we've gone all the way back to the bottom. Well, I'll explain this movement in a minute, but here we've gone back to the bottom, so we're likely, the theory goes, to retrace back to the middle. And then if the middle breaks, it's the 20 period moving average here, if the middle breaks significantly, it will tend to move to the other limit. And again, that's the theory of it. So here we've hit but we didn't break it significantly. We broke it significantly here. Now we came back and then ended up the other side of the Bollinger Band. Now then here, this is where many people become unstuck with Bollinger Bands, expecting it to, the theory says it touches the outer Bollinger Band here. For instance, here, if we got to this point here, we'd had seen this big candle here. Theory would say, well, it's closed not quite as low as that one, but it looks like it should have some more, it should retrace from here because we've touched the out of the Bollinger Band, but it doesn't. And that's just one thing we have to be aware of with the Bollinger Bands. They can stick and slide, as sometimes you see it tall. They can stick to the outer Bollinger Bands, and that can be one of the most frustrating things with them. So it's one of their negative or problematical issues. However, there are techniques that, again, Jay talks about in his webinar about this is, he calls this a waterfall or a certain pattern where it sticks to the Bollinger Band. So this is showing good negativity. Okay, and the reason for that is we've had three for instance, so this candle here, when it first broke significantly, we've had three movements down, but the bottom, the wick went through, but the body didn't. Here it was shown, well, surely it should return now because it's closed right on the Bollinger Band, but again it didn't. There was still more weakness and more weakness before it finally retraced, and when the retrace did, it was a big engulfing one that gobbled up the three previous, because we'd had 1, 2, 3, 4, 5, 6, 7 movements down before a big movement back up in this one. So that, again, and that's a typical. So here, once it had finally retraced from the extreme, there was quite a strong probability that we were going to get back to the midpoint, and it did eventually. But again, because of the weakness, it tried to go lower again, but it couldn't break that point here, and eventually we got to that point, but it just wasn't strong enough to bring it down. We've had more weakness, so it's continued. But as you can see now, we've gone sideways away from the Bollinger Band. So this area here has helped us with this sideways movement here, this congestion movement here. Okay, so as we've gone lower here, we haven't got to the extreme, but we've punched through, but it's not strong enough because we haven't had the energy at the extreme. We've come back and punched through, but we haven't got to the top. So that's when we get these ranging areas as well, and that's where the Bollinger Bands can be quite useful when we're starting to go sideways. So we've not got to the extreme. So we got to our extreme here back in whenever the date this was, but we've never got to an extreme again until just here, and even that was not very weak. And that is you get this quite often when you've had this sort of waterfall effect, when you've had this sticking to the extreme for a while. So we then tend to get this sideways movement and then drifting over. Okay, so in simple terms, if we're in the extreme, we tend to retrace to the middle. If we're at the bottom, we tend to retrace to the middle again. And if we break the middle significantly, that's when we have this movement. And so again, so the idea is that, obviously possible sell positions at this point, possible buy positions at this point. Obviously it hasn't worked out that particular movement here. So, and again with ranging, we're looking to sell when we get to when the market's going sideways here. We'd be looking to sell or buy, but again, if we were just looking at the Bollinger Bands here, they're not. We've not got to these extremes, although we are going sideways. So it sort of would have helped with that. The other thing about the next thing about the Bollinger Bands is the wider they are, the more, the greater the volatility. Okay, and the larger the candles will tend to be. Okay, so the more energy that's suggesting in the market. So here we've got a volatile market and also a very positive market because we're above we're in the top half of the Bollinger Band. We've got a strong trend and it keeps on going. So as this trend develops here, say we got to about this point here and we start this bit of a retrace after we've had this movement up here. What's the Bollinger Bands telling us? Well, we're just looking at the Bollinger Bands. We're above the midpoint, so that's positive. We haven't got to the top of the Bollinger. Obviously, this is plotted like this now after this has happened. So at this point, the Bollinger Band was probably a bit closer to these candles. But it's very positive because we're still in a nice a trend going up, without the bottom. You can see that there's a movement here. We've retraced, but we're above this 20 period, the midpoint, so that's still positive. So it's still positive, and it only becomes a question of negativity when we sort of break out. We've had this sideways movement, this smaller reduction in the candle size, so the Bollinger Bands have pulled in a bit here, and so we've got this sideways, and then see how we've got this tweezer, it's pinching of the Bollinger Bands here as the candle sizes have gone shorter and also sideways. So this is a delayed reaction from this. That's the other thing with all these indicators, they're a little bit afterwards. So we've got these big candles here, suddenly causes this widening of the Bollinger Band, so greater volatility, greater chance of completion. So as we've got increased volatility here at this point, we're below the key move, so we're still looking to have perhaps short positions because we're below the midpoint as well. Okay, does that make sense? So above the midpoint is positive, whether we're trending or ranging, and below the midpoint can be negative, whether we're trending or ranging, and use the extremes of the Bollinger Bands for look for turns in either the range or the trend, and that's why they're so useful. And the other the thing I really like about them is that you can look at them. It's all, as with all indicators, great looking at this and explaining it after it's happened, but what we're interested in is this part of the chart, isn't it? We're always interested in what's going to happen next, not what's happened in the past. What's happened in the past helps us to suggest what's happening next. So what we see here is, if we just look at the candles, this euro dollar yen, which we know is at a multiple week low, it's broken through. If you had a support line on here, it's broken through there. And how do we use the Bollinger Bands to help us? Well, it's broken the midpoint, so the theory says it's likely to get to the extreme, but because we've had this 1, 2, 3, 4, 5, 6, 7, 8 movements down, the volatility's increased, so the jaws of the lion are opening here. See how we've suddenly got widened, I should say, but the lower one is pointing down, so we're still looking to go down. So we'd look to this top one start turning over to see if this trend is going to continue, but it looks very weak, and until we hit there's still the Bollinger Bands here are telling us that there's still more weakness because we've not got to that extreme. That would be added to if the top started turning down, because the other thing you can do with Bollinger Bands is you can look at them and they give you an indication of the general trend as well. So if you're looking to take a short position on this one, for instance, you've got the midpoint and the lower one pointing down, which is quite negative. The upper one's still pointing up. That's because it's reflecting this this strong move here across the midpoint. So again, that's negative. Here you can see the Bollinger Bands have gone sideways because we've had a little bit of congestion zone here. We've not got to the extreme, so that's when the Bollinger Bands shrink, but also start to go in a more horizontal direction. Here we've got the downtrend with the Bollinger Bands pointing down and the price in the lower half of the Bollinger Band, negative. Here we've got the price candles in the upper half of the Bollinger Band and the Bollinger Bands pointing upwards, so that's positive. Okay, but as you can see, they're as with any indicator, I say that they tend to be lagging. So the trend topped out here, and the Bollinger Band was still going up while we were still going all this sideways movement, weren't we? So it's still saying, so the trend has run out of energy, but we've gone sideways, but we haven't gone down. We've gone down here quite aggressively, but the Bollinger Band only turns down really after this, fourth or fifth candles move down. So again, as I say, like all indicators, treat them with caution, treat them with respect, but they can be one of your best friends. They're quite simple to understand. What's the Bollinger Band doing? Where is the price within the Bollinger Band? Are we in the upper half? Are we in the lower half? Have we broke the key middle point? And for me, a lot of you, if you follow the trades I put on, the 20 period moving average on the daily chart is one of the key bands or the key lines I like to look at for breaks of energy and of changing position or potential entries. And the other thing, obviously, have I got a slide on? I'm not sure I have actually. No, sorry about that. The other thing about Bollinger Bands is that people use them because of their extremes as potential entry points. So you could have set your if you think that the dollar yen is going to get oversold, you could have perhaps a buy position down here, or you could have had a sell position at the top of the Bollinger Band. Or if you'd entered, for instance, on this one, if you were trading this daily one, you'd waited for the 20 period to break, it'd broken there, you could have entered that day or at the end of that day, and your target, quite often the lower Bollinger Band. So as you'd entered here, your target would have been down here at 11, whatever it is, 1170 something, and that would have been hit within 1, 2, 3, 4 days on this one. Okay, and similarly here, you could have entered here with a target at the Bollinger Band here. Obviously, it's a bit closer, that one, but that one would have got there to a bit of a dip 3 or 4 days later as well. So they're great for setting targets. They're also quite good for stop losses as well. If you want to have your stop loss at the extreme, the latest low or the latest high, have them a nice little collection there. And if you want to be super safe, you could have had your stop loss down here where the Bollinger Band was. That's a nice little flaw, and we didn't, we went up there. Here's a good example of one that didn't quite work out. So here, if we just looking, simply trading the Bollinger Band, we'd had a nice flaw there. This one had indecisive candle. Here we've got a break of the 20 period, which is good. The only question would have been that quite a tall wick, but some people would have jumped in there. Perhaps a target all the way up here. It hasn't happened, but you might have had, if you'd had your stop loss down here, that's okay, but you could have had the 20 period here is also your support. So that was your entry. It could have also been your support. So your stop loss would have been quite short there if you'd had it at the 20 period, and you'd have got out with a smaller loss than down at the bottom here. So again, it doesn't always work like with any trading, but you would see that if you're following this on the daily, you'd see that it started to go sideways. It went up, didn't quite happen. Next day it was down. Next day it was down. Next day it was down. Is it gonna? So you might have that's broken. That's gone, and that one wouldn't have worked out either. That one did work out. So it's like any of these indicators. Treat them with the respect they deserve, but never ever use them on their own. And obviously, always use your common sense. Clearly here, there's a big support line here. You can see, manual support you'd draw in the next one there, and try to get up. It just hasn't happened. Little suggesting, that's a suggestion of running out of energy. These small candles, tall wicks, dojis, shooting stars. So there we go. That's there's a heads up there when you look at it like that quite clearly. there's 3 days and big fourth day down, and then off we went. We broke that, and that's a classic trend move there. Gerardo's asking here, is it okay to use the top line as a stop loss and bottom as your take profit? Absolutely. Well, absolutely. But remember, if you're looking to trade the range, trade the actual movement of the band, the key resistance will be the midline. So the theory goes, you perhaps should have your first target here at the midpoint, whether you're going up or going down, and then your second target perhaps at the extreme of the Bollinger Band. I use them quite a lot for that sort of thing. You know, those of you who follow me and listen to me often, I like the 14-period ATR or a multiple, a little bit more of that for a strong target as well. And more often than not, it will coincide with either the extreme of the Bollinger Band or a Fibonacci level if we've got a trending market. And when you get those 2 or 3 levels all sort of coalescing at the same point, all at the same confluence point, you can get some good strength. It's becomes self-fulfilling then. Okay, that's really all I wanted to talk about on Bollinger Band, because there's lots more we could talk about in a more complicated situation, but if you understand the basics of them and understand where they're coming from, it's all about energy, and it's all about distance from the norm, and things can't go in one direction forever. They tend to get pulled back, and that's what the standard deviation is plotting, and the standard deviation is telling you all the time that we're overextended sometimes. Okay, what is a good combination to combine perfectly with Bollinger Bands, Libby's asked? Well, let me just pull in, I like to use them with, let me just pull this one up. Is that the yen we were looking at? Yeah, so this is I stripped everything off here, but I like to use them with MACD, other so it's an oscillator. So we've got the trending with the trend line. I like parabolic SARs. Okay. Again, that hasn't come out very well. I'll take that off. But you should really use them with some other oscillators like the MACD or like the RSI. Again, you see how they tie up. Let's insert. Let's put where's the RSI gone? Strength there. Can't see it if we're looking at it. So again, 14 is a default on the standard way. So how would you use these together? So let's have a look. So I've just put the parabolic SAR. Parabolic SAR stands for stop and reverse. So we get to a point now we turn around. So it's like the extremes of the Bollinger Bands. So here, for instance, can everybody see the parabolic SARs on there? The little dots are on here because they're a wee bit not very clear. But again, the problem with the parabolic SARs, as we've had this sideways movement here, they're whipping around. But the theory behind parabolic SARs is that they can sort of change direction quite quickly. So here we've had an uptrend on the parabolic SAR. That's in agreement with the fact we've broken over the. Let me zoom in a bit. Actually, it's probably a bit too big. So I was talking about this level here. I was just talking about. So here we've broken over the midpoint. Parabolic SARs turned positive, so we've gone up, and we kept going up, but we didn't. We got to the extreme here on the Bollinger Band, we turned down. What was anything else telling us? Well, down here on the RSI, we were still going up here as that was going up, so that was in unison. This didn't get to its overbought situation here, so this is suggesting it still had some more energy, but it didn't. It went sideways. RSI was going sideways. Parabolic SAR was still turning up, so that hasn't helped us. RSI is going sideways, but we've had these levels, and then as we've had this break there, we've had a big step down in the RSI. So the RSI is now in unison. We've got that in, they're converging. Strong trend, and off we go. So RSI is quite a good one with the Bollinger Bands, and again, you know, the best ones of all tend to be your annual manual support and resistance levels. So this is suggesting this support level here, 1, 2, 3, 4, and this one here, this 11 on this particular pair here, 1160, is a key support level for the dollar yen, and it's broken it. And if it breaks below that today, which again is suggesting we could have some more weakness. So again, look at what the Bollinger, but this, remember, it's a daily candle, so it's not finished yet, it's not closed yet, you need to wait till it's closed. But as we progress, we're sort of halfway through the day here, the RSI is still pointing down, it's negative. Remember, it can get under these levels, it's on the 30 level on the when we're at 14. So that's still negative, and there's still more weakness there potentially. But you know, that candle hasn't closed, so you can't make that decision. You'd have to make your decision on, you know, what happened yesterday if you were trading on the daily candle. And again, yesterday you would have suggested more weakness because we were at this key level. And again, the day before that, you would have already had this support level in because it's here, 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 and here. So, you know, as this had broken, this could have been your target level quite comfortably, because here we've got everything in unison. The RSI has turned, the parabolic SAR has turned from being positive to negative the day before, and the big candle here is taken out, you know, it's engulfed all these other candles here. It's been a strong one compared to the previous ones, and it's broken the key level, the 20 period moving average, and the middle of the Bollinger Band. So the theory says once it's broken the middle of the Bollinger Band, it tends to head towards the bottom of the Bollinger Band, and that's exactly what it's done in that particular situation. So that's how you put them all together. I hope that's answered your question, Libby. It's all down to you. You know, it's the ones that the key thing about trading is that it's the indicators that work for you, and it's the time frames that work for you. But that's a story for another webinar. So any more questions, and I'll call it a quits today because I talked for far too long yesterday. Any final questions on Bollinger Band, or anything I haven't touched on that you'd like me to touch on of more greater detail? Perhaps I've just sort of skimmed the idea. Funnels and tunnels. Okay. Awesome webinar. Okay, Abdul, thank you. Tunnels and funnels. It's all about shapes, Yanni. Basically, you know, as we widen, more volatile. So yeah, they don't tend to move back in quickly. So this here, you know, this is why, you know, the technicians looking at the at this chart, the dollar yen. This is what, remember, sentiment is against the dollar at the moment, so the technicians are catching up here. This is widening, so this is suggesting more volatility, and so it's going to be once it starts moving in one day, it's a wide. It doesn't. It's like, you know, they don't turn very quickly. So this is widening because of this big long move here. We may have some support here. We may have some return back to this, but this is looking quite weak. And where's the next support level on this chart, ladies and gentlemen? Well, it's quite difficult to suggest, isn't it? Because the run up was without hesitation. See? The suggestion was this great big long wick here, but the run up, thanks to Mr. Trump, of the election, here we are back in November, was without hesitation. We've had a few runs down, gone sideways, but this is perhaps as significant as this one here. So we may be looking to go sideways as this tunnel, as we say, is starting to go sideways. But it'll be interesting where this finishes today as well. How much the winning percentage if we'll use Bollinger Bands? Is there any fix, or it depends on the market still? I don't quite understand that, Libby. You mean how effective are Bollinger Bands at predicting winners, I guess? Well, there's lots of statistical analysis done on all these indicators by very much cleverer people than I am, and they do okay. they wouldn't be popular, they wouldn't still be used 30 years or 30 odd years later after John Bollinger put them together. Remember, you know, it's the same with candlesticks. Candlesticks were invented centuries ago. They're very simple, they're very easy. So people like them, they use them, and they're effective, and they understand them. You know, indicators come and go. You know, mathematicians come and go. They create indicators, and some stay, some disappear. Some become popular, some don't. So Bollinger Bands, many people understand them, many people use them, okay? How to trade with Bollinger. Well, Hiram, well, hopefully I've just talked about that for the last 45 minutes, okay? So any final questions, and we'll call it a day. Yanni, sorry, Yanni, are you still here? Did I answer your question about tunnels and funnels? If not, I'll email you directly if you like a bit more detail. Yes, thanks, he says. Okay, I'll send you in a direct email, Yanni. More combination of future women, Michelle. Okay, thank you for that. I've been told the opposite by some people here at the company to try and simplify things. But yes, I understand, Michelle. Yeah, I tend to have. What I will tend to have, Michelle, to be honest, is 2 or 3 indicators down here, and typically my support and resistance lines on here, and usually, you know, this is a classic example of Fibonacci for me, and again that double top there, and look at all Fibonacci cracks again. So we've got that top, we retrace to that one's there, and look what we're saying. See what's happened today? See how great Fibonacci is? But that's that's a webinar for another day. But you know, Fibonacci is one of those weird things. Look at that. See how we put that manual support and resistance level, that support level there, and look what it coincides with, the 38.2 Fibonacci level. So where could be, if that was your first target, if you'd got in here, your target might have been the bottom of the Bollinger Band there, which we'd hit today. Thanks very much. Where would my second target be? Those of you who know how I trade, possibly down there, 109.96. Okay, all right. Thank you for your. Oh, some more questions coming in here. Out of the context, your battery is full, sir. Switch off the charger. All right, okay. Yes, that's a fair comment. Default Bollinger Band setting still good for the shorter time frames. Yes, because they're measuring volatility, Karim, and 96% of the price action, again, this is a theory, 96% of the price action is captured with the standard setting at 2 and 20. The other thing to bear in mind, Karim, is remember lots of people just use the standard settings. They don't bother fiddling with them, or they fiddle with them, change them, and then come back to the standard ones because they don't see much benefit in changing them the 2 to 2.5 or the 20 to 25. And so they end up, so the vast majority of users, whether they're professionals in big banks or retail traders like you and I, they'll tend to have the standard settings on the standard timeframes. Yes, it's one of those things that doesn't really vary with timeframes. I should have mentioned that actually in the presentation as well. Okay, thanks for your time today. I'm going to go and get some lunch, and look forward to speaking to you next week when we'll do some more live analysis, see how March is ending up, and I think we got this advanced trading seminar tomorrow as well. So thank you very much, and I will speak to you again next week. Any questions, send them through to webinars@hotforex.com. Yanni, I won't forget to email you about the tunnels and funnels as well. Okay, all the best. Take care, everybody. Bye-bye.